All right, so here's a question that I got today. Interest rate is low. I have equity in my house. I need some money. So should I do a cash out refinance or a HELOC? Let's talk about that in a minute. Hey there, this is a KG with Fairfax Realty in Greenbelt, where we help buyers to buy their dream home and sellers to sell their houses. And we do this in the DMV area, from Baltimore to Bowie to Silver Spring, and everywhere in between. We help buyers to buy their dream home and sellers to sell their houses. Listen, if you're looking to buy, sell, or move into DMV or move out of DMV area, contact us below. We'll take care of you. And we upload videos weekly on what is going on in our market area. Please subscribe to the channel so you get an update once we upload a new video. All right, so the question from my client is, I have equity in the house, a good thing, but I need cash. So what should I do, a cash out refinance or an HELOC? All right, let's talk about it. So what is a cash out refinance? A cash out refinance is when you take advantage of the equity you built up in your house and you take that money out, a lump sum. uh, for example, say your current house, the value is 400,000 and your current mortgage balance is 200,000. So you have 200,000 equity in the house. Now you can take a lump sum out when you refinance, get a new mortgage and take a lump sum out, and then that is a cash out refinance. You can only take out up to 80% of that amount out. So on a $400,000 home that is now $400,000 and your mortgage is 200,000, you can take out a new loan of 320,000, and then you take out 120 as a cash out, a lump sum, and your new mortgage balance now is 320,000, and your new payments will be based on the $320,000 mortgage, right? So that is a cash out refinance. Some of the advantages of cash out refinance is you get a lower interest rate. Your interest rate is very low, so you can get it depending on your credit. You can be 2 point something or whatever when you do a cash out refinance. The interest rate that you're paying on the money you're taking out may be tax deductible depending on your tax situation, talk to your tax accountant. Some of the disadvantage of cash out refinances, you have to pay closing costs, which can run between 2 to 5% of the new loan that you're taking. Your new payment is now going to be based on your new mortgage, right? So that means your payment is going to go up. The other disadvantage of cash out refinance is uh, you may have to now be paying PMI. If you take over 80%, then you have private mortgage insurance that you have to now be paying. It also resets your loan. So if you have a loan that you've been paying, maybe you paid out 5-10 years. Now when you do a cash out refinance, it may now reset again to 30 years or 15 years depending. So those are the things about cash out refinance. What about HELOC? HELOC is that's just an acronym, is home equity line of credit. Home equity line of credit also take advantage of the equity you have in your house, right? But instead of getting a lump sum out, it's going to be as a line of credit. Think of it as a credit card. So if you go to a bank or a credit union, whoever you want to use for a line of credit, they will look at it, the equity you have in your house, just the example of cash out. If the house now is worth 400,000 and your mortgage balance is 200,000, you have 200,000 equity. You can only take 85% of that with a HELOC. So they will give you a line of credit for 85% of that, and then if you need the money, it's like credit card. When you need the money, you use it and then you pay it back. You use it and you pay it back. What are the advantages? The advantages are the closing cost is lower when you do a HELOC. The closing cost is very low. It's lower. The disadvantages are the interest rate on HELOC are higher. It's a second mortgage, so the interest rates are higher. you have to now pay two mortgages, your primary mortgage, and then when you take any money out from the HELOC, you have to pay that. So you have two mortgages that you have to pay. The interest rate on HELOC may also be tax deductible depending on what you do with the money you're taking out. Talk to your accountant. So both of them have their advantages and disadvantages. You have to know what it is that you want to do before you actually proceed on any of them, cash out or HELOC. The word of caution is to make sure you know what you're doing, you know what you're getting into, because the loan that you're taking out, if it's cash out or if it's HELOC, is a lien on your property. So now you have another debt. You're adding debt to your property. So if your plan is to actually do something with the money, which is always a good thing, that's fine, but just know what you want to do before you take the money out. A lot of people do cash out or HELOC, they take that money out and invest it in real estate or upgrade their house, get a new kitchen, get a new flooring. All these things are good, but don't take money out to pay credit cards. That's me, but hey, I wouldn't advise that. But like I said, what is your financial goal? What are you trying to do? Look at it and then proceed cautiously and make sure you know exactly what you're doing. Make sure you can afford it at the end of the day so that you enjoy the equity now, right? And do stuff that you want to do. All right. Listen, guys, if you're looking to buy sell in the DMV area, contact us below. I'll take care of you. Don't forget, subscribe to the channel so you get updates once we upload a new video. Ciao.